Gold to $10,000. Some say that's outrageous. Others say it's inevitable. But let me ask you, is gold already too high? Did you miss the opportunity? Or is this the beginning of a process that's still unfolding? When I see the Fed cutting rates when inflation is still running hot, central banks shifting from U.S. Treasuries into gold, and trust in the U.S. dollar eroding worldwide, I see a path ahead, and that path leads to $10,000 gold. On September 17th, the Federal Reserve cut interest rates by a quarter point for the first time this year, even though inflation remains above target, and they signaled more cuts are likely before the year is out. Lowering interest rates decreases the dollar's value in a year that the dollar has already lost more value than it has since 1971, 10.8% in the first 6 months. For retirees, the shift happens immediately. Savings accounts and CDs are already paying you less. Meanwhile, inflation is still eating away at every dollar you spend, so you earn less and spend more. Is that the retirement you planned? Inflation is a nightmare for retirees. It doesn't just raise prices, it erodes purchasing power. Think about the inflation of the 1970s. It took over a decade to clean up that mess. The difference is, that was an American problem. Today, it is global. Ask yourself, what happens when the world's reserve currency starts to crack? More importantly, what happens to you? For decades, central banks filled their vaults with U.S. Treasuries, America's IOUs. But now, for the first time since 1996, they hold more gold than Treasuries. Where do you think this trend could go next? Imagine what would happen if central bank allocations moved towards 75% gold holdings again. Where could that send the price of gold? Do you really think these central banks are about to reverse course, dump gold, and start buying U.S. Treasuries again? Of course not. The fiat experiment is unraveling, and the very institutions that created it are quietly admitting it by stockpiling gold. For 50 years, we have been told gold is a relic, and paper money backed by nothing is normal. But history says otherwise. So the real question isn't whether gold is priced too high. The real question is, how far can it go when the world decides paper money isn't wealth? Central banks have been net purchasers of gold for 15 consecutive years, buying over 1,000 tons of gold per year for the past 3 years. And this isn't just China, Russia, India, the Middle East, or even U.S. allies who are accumulating gold. A recent World Gold Council survey revealed that 95% of respondents believe global central bank gold reserves will increase over the next 12 months. You might hear some people say that rate cuts are good for stocks. Sure, stocks can bounce. But let's stop and think about it. Is it because companies are earning more or because cheap money is inflating prices? That's not growth, that's a bubble. And if you're in the red zone 5 years before or 5 years after retirement, one crash can devastate savings. Gold's rise is different. It's not based on cheap money, it's based on structural demand and finite supply. Central banks are buying record amounts. The dollar is losing trust. Gold has a finite supply. So we know that the central bank buying trend is likely to continue. We know this is a steady trend that has the potential to reach all the way back to its historic high of 75% in central bank reserves. That's why I don't just see the price of gold hitting $3,700 an ounce. I see $4,000, $5,000, and yes, over time, even $10,000 an ounce. So let's put this all together. Your savings accounts are paying you less. Inflation is still hot. Stocks could be melting up. Meanwhile, central banks are accumulating a record amount of gold. So the question is, do you want your retirement riding on the Fed or anchored in true value? The sequence is predictable. Rate cuts now, quantitative easing later, more dollars printed, more inflation risk, higher gold. We know from history that the 1970s inflation cycle took 10 years to fix. Today's mess is bigger, more global, and harder to solve. So no, the dollar isn't going to be saved, and central banks aren't going back to treasuries. The trend is one way. The question is, do you align your retirement with it or ignore it and pay the price? You've worked too hard to let Fed games decide your future. This isn't tomorrow's problem. It's today's reality. And $10,000 gold isn't a dream. It's the logical outcome to a process already underway.